Welcome to our comprehensive guide on tax residency in the District of Columbia. If you're planning to live, work, or own property in DC, understanding how residency impacts your tax obligations is crucial for avoiding unnecessary complications. The district has unique rules governing tax residency, which greatly influence not only your income tax responsibilities, but also your eligibility for various benefits. Whether you're moving for a job, education, or lifestyle, knowing how to navigate these complexities can save you time, money, and stress. Let's dive into what it means to be a tax resident in the nation's capital and how to stay compliant. To establish your tax residency in DC, it's essential to understand what defines a DC tax resident. This categorization is primarily governed by the Office of Tax and Revenue, which employs specific criteria to assess your obligation to file and pay taxes. The most significant of these criteria is the Statutory Residency Test, which uses the 183-day rule. If you maintain a permanent residence in DC and spend at least 183 days there during the tax year, you are officially considered a statutory resident. This means that even partial days count towards that threshold, emphasizing the need for meticulous tracking of your time in the district. Beyond the statutory test, DC also recognizes residency through domicile. Your domicile represents your permanent legal home and reflects your intent to return there after any temporary absences. Unlike the simpler day count method of the statutory test, establishing your domicile takes a more nuanced approach. You need to show clear intentions of making DC your primary residence by taking actions that affirm your commitment to living there. Factors such as where you register to vote, maintain your driver's license, or even where your family resides are taken into account. Remember, you can only have one domicile at a time, which complicates situations for those transitioning between homes. If you're aiming to become a DC tax resident, there are key actions to take to solidify your status. Firstly, ensure that you meet the 183 days physical presence requirement, keeping precise records of your days within the district. Tools like Pebbles can help track your presence efficiently, providing the necessary documentation in case of any questions about your residency. Secondly, demonstrate your intent to establish DC as your domicile by engaging in activities that create a concrete paper trail, such as changing your address on legal documents, enrolling in local schools, or acquiring local services. These are essential steps to avoid disputes with tax authorities regarding your residency. Understanding the implications of becoming a DC tax resident is vital for effective tax planning. Residents face a progressive income tax system with rates up to 10.75%, depending on earnings, which is among the highest in the country. Moreover, even if you're not a resident, any income generated from DC sources may still incur tax obligations. It's important to maintain accurate records and file the appropriate forms, such as Form D-40 for residents or Form D-4-ONR for non-residents, to ensure smooth compliance with local tax laws. As you navigate your residency status, remember that leveraging available deductions and credits can relieve some of your tax burdens and make residing in DC more financially manageable.